Hello again, this is top-rated forexbrokers.com and we continue our Trading Academy project with the types of orders to use in Forex trading. Now this is the MetaTrader platform, but the types of order that we will discuss here are valid for any number of trading platforms, be it an in-house built one, or JForex, or MetaTrader, or whatever you have. These are the orders we want to discuss. You don't have to worry about everything or anything we do here, as this is a demo account, as you can see here. It belongs to this broker, but only because I opened a demo account and they are free to open and there is no additional cost. If you click on the terminal here, you will see the balance is $10,000, equity $10,000, free margin $10,000. At this moment in time, I would like you to go back to the previous videos in our Trading Academy and check the elements of a trading account, where we explain there about trading with no equity in a trading account, where we explain there about no equity in a trading account and no balance. What's the most important part of interpreting a trading account? Of course, it is the equity, and now you get to see why. The first type of order, and actually the most popular one by the retail traders, is entering at market. What does it mean? This is the FX market. If you want to see the FX market, you open the Market Watch. Currency pairs are the bread and butter of the equity market. So Euro US dollar is 17.89. Double click on it and this is the volume. The more you buy, the higher the risk here. If you buy only 0.01 lots or buy one lot, there is one difference. For every pip that the market moves, you will have bigger exposure. So let's buy 0.5, or we sell, or we buy. It doesn't really matter. These are the types of orders. Market execution. If you buy it at market, the broker automatically fills it at market and then you click OK. We bought 0.5 lots or half a lot of Euro US dollars at 17.91.9, and these are the stop loss and the take profit. So one order was to enter at market and the other was to set your stop loss. This is still an order because if the stop loss is reached, then the broker and the trading platform will automatically execute your order because after all, it is an order. So we went long at 17.91.9 and we chose a stop loss of 1.1765. Because we went long and we expect the Euro US dollar to move to the upside, then the stop loss should be lower than the entry price. Take profit, we went long 17.91.9 and we want to take profit at 1.1850 for money management reasons, which we'll find out later in our program. The FX market is designed to use a risk-reward ratio. The bigger, the better. So what does it mean? It means if you risk 1 pip, you stand to win at least 2 or 2.5, and therefore you have 2 or 2.5 chances to be wrong and still not lose your equity. But more on money management later. Let's accept this. So we modify the stop loss and the take profit appear here. Actually, this is the US dollar Japanese yen on the screen. So let's click and drag the Euro US dollar and you have the option to see it here in front of your screen. Now you can opt from the tools and options here. You can choose not to see these levels here. Why would you want that? Well, one reason would be that if you have a technical analysis in front of you, or you use all kinds of indicators on the screen, or you use horizontal support or resistance levels and so on, you will have a tough time finding the difference between a supported resistance level or a take profit or the entry price and so on. But if you have multiple screens, you can download the MetaTrader in various folders on your PC and desktop, and you can put on a different chart to see the levels. And they will appear like this. From this moment on, you can rest assured that the broker, according to the contract that you signed and agreed with the conditions in it, at the moment when you opened the trading account, the broker is obligated to fill your take profit if the market goes 1850 automatically, or your stop loss. In other words, as long as the euro dollar stays between the two, but not reaching either of them, the order here is in place. You don't make money and you don't lose money. If the euro dollar reaches this one here, then you will make a loss, and in here you will make a profit. Look at the elements in the trading account and then go back to what we've discussed earlier in the Trading Academy with the elements. Look at the equity. This is the most important one. The balance won't change if you buy or sell something, but the equity will change together with a trading condition for the currency pair that you have. And of course, the margin. This is the margin blocked. For one lot, the broker blocked or took as collateral of $589.60. We still have 9,420 odd of free margin, and the free margin will change together with the equity. We've made $13. Right click, close order, click yes, I accept the terms, and OK. Click close order, and it automatically closes. We made $12. This is a demo account, so don't get too excited. But it is as it is. This is the simplicity of the FX market that attracts many to it. In reality, if we continue to do what we just did there, we will end up losing money. You might say, how come? We just made $12 out of luck. Remember the risk-reward ratio. We risked or had a stop loss at about 30 pips, and we took a profit of 12. It doesn't mean you shouldn't do that, but only when it comes at the end of a logical process and not just going in and out to make a quick buck. Not that there's anything wrong with it, but in the long run, you will be punished by the market. So what other types of orders do we have? Let's assume that we don't want to go long at market or short at market. Let us assume that we only go long when the market reaches 1.1861. So we want to buy from what? This is the market here, and this is the level. We want to buy at higher levels. This is called a buy stop order. So we'll go to Euro US dollar, right click, and then new order. Not at market execution. We want to place a pending order. Buy stop is when you want to buy from high levels. Sell stop is when you want to sell from lower levels. We want to buy at higher levels, so we want to buy stop. Let's say at 1.18618. So we go here, volume 0.5, the order at a price of 1.18618. We set a stop loss then at 118. Take profit again, maybe 122.5. So let's go for 1.20 and then place. This is where the market is. If the market goes through the stop loss, it doesn't mean anything. This one will get to be placed only after you are filled on the pending buy stop. This one will then become active. This one is not active. Make sure you avoid the mistake that I've made in the past, namely when you place a pending order and the market doesn't fill it. Make sure you always check your trading account, because in a day from now or 2 or 3 days from now, it may not be valid anymore. You won't want to buy by the time it comes, and therefore either modify or cancel it and it will disappear. The opposite is true when you want to sell at lower levels, sell stop. If you want to sell from higher levels, let's assume we want to sell then from 1.18618 and we have the same option. We go new order, pending order, and choose sell limit this time. If the market moves to the upside and we want to sell on the upside, These are the types of orders that the MetaTrader offers. There are some other types of orders, but they're not allowed in all jurisdictions around the world, like one cancels others, for example, and so on. I would say that you've got what you came here for. Thank you, and let's move on. Bye for now.